As you can tell by the presentation, our next guest is a little unorthodox, not your typical finance analyst. His name is Christopher Irons. Chris started writing about finance and pulling back the curtains on the BS of the industry under his moniker Quoth the Raven in 2013. Since then, he's been quoted in the Wall Street Journal, Financial Times, and Barron's, and has made Seeking Alpha's list of top bloggers, Forbes 100 Twitter accounts in the financial world to follow, and has shared the stage as a speaker with acclaimed investors David Einhorn, Andrew Left, Ben Axler, John Najaran, and many others. So please welcome Chris Irons. Yeah, thanks.
He said pulling the curtain back on the BS in the financial industry. Just so you guys know, the BS stands for bullshit. I don't want anybody to get confused here. They asked me if I wanted to do slides. I was like, well, Spiegel's going before me. He's probably going to have 270,000 of them. So maybe I'll just go with 0 to give you guys a break, from like a visual stimulation standpoint. What am I doing here? Seriously. I am like the only thing that stands between you guys and happy hour today. Actually, I noticed on the program that it's me and then there's a magician. And I think they're placing me now at these conferences in part of the entertainment section of the conference, and no longer the financial analysis section. I've kind of drifted into well, here's Chris Irons, and then we're gonna have a guy that fucking makes balloon animals after him. All right, so what am I and what am I doing here? Let's get to all of it. It's interesting even to me what I'm doing here. 8 years ago, I was serving beers in a bar in Philadelphia, and never envisioned myself to be speaking at a financial conference, let alone several. I know I look like I just rolled out of the Vegas freak show, and not your traditional financial speaker, but here's how I got here. I took kind of this weird, ass backwards road into the world of finance. I'll talk about that for a second. I'm going to talk about what I advocate for, and that should pretty much do it. So I'd always been interested in the markets, right, from age 16, 15, because I always loved to gamble. Even in high school, we were meeting in the boys' room, rolling dice, playing CeeLo and shit. I loved playing poker when the World Series of Poker started to come out. I was pretty much like a degenerate gambler. So naturally, I was drawn to the financial markets. And I didn't even think that was that funny. That was actually just true. Jesus, take it easy on me, guys. So I started there, and I remember actually back in the late 90s as I was growing up, you used to have to check the newspaper for stock quotes because it was everything wasn't online yet. Netscape Navigator had come out and some things like that. But generally, if you wanted to take a look at how your blue chips were doing, you had to open up the paper in the morning. The annual reports, you couldn't get them online, right? You had to mail away for them. So you send a self-addressed stamped envelope, like everything else that had those things. You send a self-addressed stamped envelope to whoever, Edgar, and they would send you the annual report in the mail. So at that point, I started to kind of get interested in the numbers. I was like, what is this? I would open the paper every day, you see AT&T, up 2, Microsoft, down 3. I didn't know what it was, but I knew it kind of felt like casino-ish, and I was like, all right, I like this. So from there, I started to kind of invest on my own, and I did a terrible, terrible job. I mean, really bad. I learned basically by getting kicked in the balls, trying to trade everything from equities, options, futures, Forex, you name it, any type of financial instrument, I was the guy that signed up, deposited his $1,000 or $500 life savings, and then turned around 48 hours later what the fuck happened to my money? I thought I was smart, right? So that was pretty much how I kind of got my first taste of the financial world. But it was something that always interested me. I went to college as an English major and a business and technical writing minor. And then, this is nice over here because I can see you. And then after that, I went and did a graduate school program that was kind of like an MBA light. It wasn't like an MBA where you go and you learn, traditional MBA stuff. was a little bit of introduction into finances. There was cash flow statements, balance sheets, P&L, stuff like that. So that was the first time I got my first taste into like what those numbers on the newspaper page meant, right? You'd see AT&T traded at 57 and whatever, CVS traded at 3, and you always thought like, oh, 3's cheap and 57's expensive. So that was the first time I started to learn about like equity valuation. You're like, oh, all right, just because it trades for 57 doesn't mean that it's cheap. Maybe on an earnings basis it's very expensive, or just because it trades for 3 doesn't mean that it's cheap. Maybe on an earnings basis it's very expensive. So you started to learn a little bit about equity valuation. From there, kind of continued through graduate school and was bartending for a living, just trying to make my way and figure out what the hell the next thing was going to be that I was going to do. And I grew up in a household where very basic financial tenets were kind of ingrained into my head from early on, probably like many of you guys. And I like the Stansberry crew because I know people here are a little bit on the fringe. Not everybody here buys the bullshit that we're handed, whether it's from the Fed rather, or from the capital markets, from analysts. Because I've talked to a couple of you guys, and I've had discussions with Porter about the kind of people that attend this conference. So I was raised in a household where I was taught to save money. I mean, isn't that fucking weird now? Nobody does that anymore, right? Now, what we have kind of indoctrinated people to believe is that spending is the virtue, and it doesn't matter what your personal balance sheet looks like. It matters how much you can get out and spend over the course of, a year, or over the course of, a couple of weeks, right? So I grew up, and my father was a mailman. My mother worked at the local library. We had like a very modest kind of upbringing at my house, and my parents did very well for themselves over the course of a long duration of time by adhering to these super basic principles, right? Saving to create money that you can use for capital investment in the future, whether it's buying a house for your family or whatever, and not living beyond your means. My parents were very modest. They weren't obsessed with going out and having a, Mercedes-Benz. They weren't obsessed with having a huge house. They were very modest. So growing up my whole life, this stuff was kind of being ingrained in my moral fabric and in the fiber of my being growing up. So after I left graduate school, I went to work for a company. I was an investor in a company that I really liked, that I did a lot of research on, that I was sure was going to be my retirement package. I was sure it was going to be the company that was going to take me to the promised land. And of course, like anybody in that situation, it wasn't a year or 6 months after I had invested in them that the SEC sued them for accounting fraud, So as I start to pour through the SEC's lawsuit at the company, and I start to correspond with the company's investor relations, I'm really not satisfied with the way that the company is handling it. I think that this SEC lawsuit, while it had merit, was being interpreted by people that were following the company as something that it wasn't. I thought people were interpreting it as the business model is flawed, when in fact what it was it was a startup company with a small kind of accounting group of, I think, 1 or 2 people at the time. And they had booked some assets at cost when they should have been at fair market value, or the other way around. So it was accounting fraud. But it was also kind of a mix-up, and I thought that there was some nuance there that the company's investor relations team could have done a better job of explaining. So, of course, I called the CEO of the company, and I explained this to him, and he was like, hey, you think you can do it better? Why don't you come up here? They were in Niagara Falls, New York. And I was like, okay, yeah, I'll come up. And they were using a third-party investor relations firm, which a lot of these OTC companies and startups do. And if you guys have any experience with that, you know that these third-party firms, they don't really know shit about the company. They have 6 canned responses that they are set to send out to investors, and that's about it. They're not engrossed in the day-to-day operations of the company, whatever. So I said to the CEO, I'm like, all right, I'll come up to Niagara Falls from Philadelphia, where I was bartending at the time, and I'll interview with you. And I hung up the phone, and I realized I didn't have a car, and I was like, I better figure something out. How to get up to Niagara Falls. I also don't own a suit, so I rented a car and rented a suit and drove my ass up to Niagara Falls and met with the CEO, and it went great. And I started to work investor relations for this company, right? And from there, I started to get my first kind of real taste into what public reporting is like. You sit with CEOs and CFOs and securities attorneys. It's very boring. And you look at red line after red line after red line of one SEC filing after the next. And it's really a painful process. But it was one that kind of took my understanding of the financial markets up, slightly, because I was starting to kind of see how the sausage was made from the inside out, which really helped me moving forward. The company, of course, went under. But that's besides the point. Thank you. I'll pause for laughter. The company ultimately went under. And as I was up there, I started writing on my own under this moniker, Quoth the Raven, which I don't know if that's up there, but it was before. You know what I do? I tell my barber to just cut it a little bit shorter back here. Just to give the appearance that I'm balding, even though I'm not. It's for a mature look. So anyways, as I'm up there and as the company is being driven into the ground by management unceremoniously, I start writing under my own moniker, Quoth the Raven, on Seeking Alpha, just to earn like a little bit of extra beer money. They were paying back then. I think they still do. $50 an article. If you could churn out an article on something, we'll give you $50. So I'm at the computer just like, yeah, I'll fucking write about anything. I don't care, So I'm just picking companies, trying to write about anything. And they're sending me checks, and this is great. I'm making a little bit extra money on the side. But I wanted to use the moniker because I didn't want the people there to know that I was kind of like writing on the side, whatever. So then a couple years go by, and I start to read some critical reports of companies. The first companies I started to read critical reports of were US-listed, China-based companies. So I don't know if you guys are familiar with like NQ Mobile or Longway Petroleum or any of these Chinese names that all turned out to be egregious frauds. But I started to read the first big, long, comprehensive due diligence report I read was Muddy Waters' report on NQ Mobile. And for those of you that haven't read it, you're not familiar with what happened with NQ Mobile, they sent some people to China. If you're a US-listed China-based company, and this is topical because it's in the news right now, what a lot of people don't know is nobody from the New York Stock Exchange, nobody from PricewaterhouseCoopers is going over to Guangzhou, China, and knocking on the doors of these companies. Hey, can we, you mind if we see the production line? Are you guys actually doing anything in here? That doesn't happen, right? So when I started to read these reports of people that were going over to China and discovering fraud, not like, hey, we fucked with the numbers a little bit, accounting fraud, like the plant doesn't exist fraud, right? Like, they say they got a plant in Guangzhou, and we send people over there to talk to the villagers, and the villagers are like, this fucking place hasn't been open in 20 years, right? And we take photographs of the rail spur at this place, Longway Petroleum, where they're supposed to be shipping out, 19 tankers of petroleum a day. And there's weeds growing over the rail spur and a gate that's locked. It looks like it hasn't been used in 120 years, right? So that kind of fraud was being committed. And I was like, wow, this is really interesting because as somebody that was kind of wet behind the ears in the world of finance, you don't really think that kind of fraud can be perpetrated on the US markets. Everybody kind of assumes that somebody else is looking out to ensure that that doesn't happen. And this is something that's like really cool to keep in mind now as we're having this discussion with, Trump possibly wanting to delist Chinese companies. I think it's not the worst idea in the world. It doesn't have anything to do with, whether or not I got beef with China. It has everything to do with what China's track record on the US markets have been, which is, long story short, I contact this company, GeoInvesting, which was the company that did the report on Long Way Petroleum. And I said, hey, this is the most comprehensive piece of due diligence I've ever seen. Like, this is awesome. And being somebody that had looked at kind of how the sausage was made from the inside, reading these annual reports and stuff, I was familiar with some of the things that they were nitpicking out of these reports to prove that this company was a fraud. I mean, again, aside from going there and taking pictures and noticing that the factory's not open, there were also other things, right? And that was my first kind of like realization, like, wow, nobody's doing anything to protect US investors from this. And it was an interesting realization. I don't know what it's like coming up through an Ivy League institution and being in, economics and finance your whole life and realizing that. Maybe it's less surprising, but for me, I was like, really? So I contacted Geo. I said, why don't you guys let me come work for you? This company I'm working for now, it's been great, but it's not going well. And I have to move back to Philadelphia at some point. And I didn't know they were in Philly, so they were like, yeah, all right, come on, work for me. So I went there. I worked for them for 5 years. I spent 5 years doing research on all different types of frauds. Some US frauds, a few US-listed China-based frauds. And what we did was we published research on these names that we thought could, let's just say, would warrant the skepticism of US investors, in our opinion, right? And throughout the course of being there, we had exposed billions of dollars in fraud. So 11 companies wound up getting delisted based on reports that they had written prior to me getting there and while I was there as well. So 11 companies have been delisted, and there was something like, in total, I think over the last 11 years, something like $15 billion in market cap of fraud that had been delisted as a result of reports that they had published, right? So now I'm starting to be like, all right, this is a little egregious. This is a little wild. You don't expect this to happen. And again, I'm thankful that I didn't enter the financial kind of industry through the main gate. I'm happy that I kind of came in as an end around from the outside, because maybe it would have shocked me a little bit less if I knew, like, oh, these are the things that go on Wall Street, right? The guys that are writing these prospectuses and the US companies that help these Chinese companies go public. And there's a movie, they made a movie about this company I was at called The China Hustle. And that explains basically everything with the Chinese RTO frauds, if you ever want to watch it and get more information on it. So from there, I started to kind of build out my understanding of the macroeconomy. And then you start to look at the central bank model that we have across the globe, right? And the bullshit detectors start to go off again. And this is kind of what I'm on right now. So I left Geo about 4 or 5 months ago, and I've been doing my own podcast for about 1.5 years, and one of the things that I talk about often in my recurring series that I have on my podcast is called Our Bullshit Economy. And there's a reason for that. Because the more I started to learn about how, from a macroeconomic perspective, things are being run, not just in the US, but also globally, the more I start to kind of recognize things where I'm like, this doesn't seem to make a lot of sense. And by pointing out those things, that has kind of what has turned me from this random bartender 7, 8 years ago into a guy that's now here on the stage. I didn't set out with the intention of being the guy that speaks at financial conferences. I set out with the intention of pointing out some things that don't make a lot of fucking sense to me. And what I found was, as I started to do that, people kind of started to agree with me and say, hey, you know what, we had noticed that too. So if you look at the macroeconomic picture from the standpoint of the United States, first off, we had the Fed come out today. I don't know if anyone's been following the news today. The Fed come out today and announce that they're going to keep buying treasuries today. But Jerome Powell wants you to know that that's not QE, right? Is that like an insult to your fucking intelligence or what? Honestly. I mean, that was a real headline that crossed the wire today, and that's a microcosm of exactly what I'm talking about, right? Growing up in that household where these basic tenets of economics were really important. Save money. You used to have one of those little books before everything was digital. You would go to the bank, you put $20 in your savings account, and they would stamp your book. They would like put it into like their printer, and then you would take it back and you'd say, all right, 3 days ago I had $280. Today I have $300. Back then there used to be this thing called interest too. So they would stamp that in the book too. Interest used to be a reward for saving money. Now interest is a tool used by the central banks to try to convince you not to save money, right? How fucked up is that? How weird is that? People don't even think about that. People don't even think about what rigging the interest rate does. So I start to think about these things. And I start to write about, I left Geo in 2018, last year. No, I left them this year. I'm sorry, in 2019. I started with them in 2014. I had started with the company prior to that, I think in 2011. So it was coming out of the financial crisis that I started to shape my understanding of how the macroeconomic system in general works. And one thing after another that you find out, you're like, really? You want to monetize the debt? You want to print more money? None of that stuff really seemed to make sense. Taking it all the way, let's just go back to, taking the dollar off of the gold standard. Sound money is something that makes a lot of sense because there's a finite supply. So like everything else in economics, if you have supply and you have demand, obviously if you skew one of the two ends of that equation, the other end of the equation is going to go out of whack as well. The nice thing about having sound money is if you have something where the supply is limited, it retains its value for the most part, in a general sense. When you print more money, like we started doing en masse in 2008, and actually I was just watching a video of Ben Bernanke before I came up on stage in 2008 saying, we're going to stop printing after everything gets better, and then we're going to reduce the money supply. It's like, how the fuck did that work out, all right? Because it didn't. I don't know if you know where we are today, but the Fed balance sheet is about to blow through its all-time highs. The money supply has never been higher. The purchasing power of the dollar has never been lower. So sound money to me, being raised in a household with these like super basic economic tenets made a lot of sense. It's like, all right, sound money, you save your money, you don't carry a lot of debt, if any, right? And you keep your personal balance sheet looking good. Then I started to dive into macro, and you realize, wow, that's not how we run the United States. Is it our balance sheet? We're $23 trillion in debt. We spend from the position of being in a deficit. And the Fed and the central banks have somehow convinced all of the common folk, probably not all the people in this room, but all the common folk, that that's what we should be doing. We should no longer be gauging whether or not we're healthy from an economic perspective on how much money you have in your wallet right here, sir, and whether or not your shit's paid off, your house, your car note, whatever, whether you're in a good, prosperous position where you have money for capital investment. We should no longer be looking at that. The only thing that matters is how much you, sir, can get up and spend over the next week. And we don't care where, and we don't care what you spend it on. Just get out there, max out the credit card, buy the Kia, whatever it is, right? And that's how we run the country. That is how central banks have convinced us worldwide that we're supposed to be gauging the economy. And we've taken all these asinine steps to kind of reaffirm that stance. The first being taking the dollar off of the gold standard, right? And then a couple decades went by and that wasn't enough. So we needed to start doing a little light QE. Hey, we're just going to pepper in a little QE here just to keep things going, you know? And then all of a sudden that turned into, well, you know, we're hooked on, as Peter Schiff would say, the monetary crack, which is what's going on now. And we can't, the stock market is at all-time highs. We've had 11 years of quote-unquote prosperity. Unemployment's at an all-time low. And the Fed has come out and said, this is a great time, we need to lower rates here, because shit's really getting bad. We have skewed our thinking so badly. We're so many sigma deviations away from the standard at this point, we don't even know which way is up. And the problem here is that the central banking model, what we're doing right now in this country and what we're doing globally, is unprecedented. We're printing money. Somebody said the other day, I think it was Powell, I saw the headline. The Fed's job is to keep the economy expanding by any means possible. It's like, no, it isn't. That's not part of the Fed's dual mandate. What are you talking about? This is the guy running the Fed. Right? The dual mandate is what? Price stability and keeping unemployment low? Not keep the economy as robust as possible at all times. A little common sense, a little reason. Yes, you want to raise rates and maybe make sure we don't get too euphoric in one direction. And then when shit starts to go in the wrong direction, yeah, you want to be there to cushion that blow. That would be a more reasonable way of looking at the Fed's job. But now we're at a point where it's euphoria or nothing, right? It's got to be full-on euphoria at all times. If the stock market's not at all-time highs every day, that's a problem. The market went down, 5% last year during December? Steve Mnuchin called the banks and then made a statement about it. It's like, dude, if you look at a chart of the Dow from the 1920s to now, we're still at the very top. We're doing all right. You don't have to call the banks, Steve, but we're so fixated on this idea that the stock market is the only scorecard and that the economy can only be healthy if the stock market is at all-time highs. What's happened is we've kind of let all these underlying variables that make up the economy get out of whack. And that's why your grandfather tells you a story about paying 15 cents for a cup of coffee, and now when you go downstairs at the Aria, it's like $9, right? And nobody really asks, why does that happen? People are just like, well, that's inflation, prices go up. It's like, yeah, well, why? Why? When I hear Jerome Powell speak and say, hey, we got to get a little bit more inflation going, I'm like, why? Everybody's cost of living needs to go up? Is that what we're looking for, right? So this is an unprecedented model that these central banks are running. We've never done it before in human history. Never. And the Fed is swearing to you that they have the answer. That the answer is the course of action that they've taken and the course of action that they'll take going forward. They're going to swear to you that even though there's no precedent in history, they know exactly where this is going. And I'm here to call that bluff. And I think that's really important. And judging by a couple of the people I talked to last night, I'm not the only person here that wants to call that bluff. You either believe that the Fed understands what it's doing and that the U.S. is some incredible superpower that is not potentially subject to hyperinflation or any of these other economic disasters that bring down countries, or you believe that the Federal Reserve and the central banks around the world are running one of the biggest long cons of all time, which, fucking surprise, that's what I think. So, what are my 2 points here? And I see I got a minute. Maybe I'll take 2. Please don't kick me off stage. I just got 2 things I want to say after I have a sip of this beer. All right. What are my 2 points? The first is being a skeptic is good, right? Question everything. I talked about this in June. Josh Brown from CNBC put up a blog post, and he said, "Perma-bears are ridiculous people." That was the title of his thing. You know, if we could all just get on board and buy the SPY ETF and just pat each other on the back for how smart we are because we know the stock market always goes up, we'll all be fine, right? And I will concede that if you've been a perma-bear anytime over the last 100 years, you've been wrong. There's no avoiding that. You know, people come up to me and they say, well, what if you were a bear in 1920? Well, you missed out a little bit, right? But what I'll tell you is, it's important to understand how the system has worked thus far, but it's also very important to keep in mind that we don't know where this is going to go. We don't know where this unprecedented experiment in monetary policy is going to go. And all you got to do is watch Jerome Powell today. I was doing this an hour before I got up here. Come out and try to tell the public that buying treasury bills is not QE. Okay? I take that personally. I think that that's an insult to my intelligence. Because this is the same Fed that told me 10 years ago that they weren't going to continue to expand the balance sheet. They were going to start tightening the balance sheet. They were going to start reducing the money supply. Lies. He's lying. It's a lie. Let's call it what it is. It's a lie. Jerome Powell lied today by telling people that that's not QE. So, hold on to your index funds. Hold on to your ETFs. Whatever you want to do is fine with me. I'm a libertarian. But just know there's another side to the equation that needs to be represented. And that's what I've been talking about over the last year and a half on my podcast and over the last couple of years on Twitter. And that's why I'm here. Because somebody needs to, bang the fucking side of the podium and tell people to just, shake the CNBC and the other bullshit nonsense off their brain, just even if it's for 5 seconds. And just realize that maybe everything that we're being told by the government, by central bankers, maybe it's not the right way to go. And these people, they're just people. Jerome Powell goes home to his wife and his kids, and the other Fed governors do the same thing, just like we all do. These people don't have superpowers. Yeah, they got Microsoft Excel Professional Edition, and you have the Home Edition, maybe. Maybe they got a couple more fucking graphing calculators, you know? But there's nothing going on at the New York Fed office that's going to give them insight as to how this unprecedented monetary policy experiment is going to go that you're not going to be able to deduce for yourself. So stay skeptical. That's the first thing. And the second thing is, and the final thing, because I know somebody's watching, I have a thing here. My time went from white to red. That means I have gone over my time. Red means stop. I'm going to keep going. That's what I made a career out of. The guy backstage before I came on said, "What size jacket are you?" I was like, "What are you talking about?" He said, "Do you want to wear my jacket?" I'm like, "No, I don't want to fucking wear your jacket. If I wanted to wear a jacket, I would have showed up in a jacket." You people are insane. It's 85 degrees and sunny out here. You guys are here in shirts and ties. Look, the second thing and the last thing I'm going to say is trust your own research, trust your own due diligence. What did I learn from, quote unquote, the China hustle and all these other, companies that I've done research on that we've shorted or, have turned out to just be absolute turds, after representing to the public markets that they're not? Nobody's going to protect you guys. Not fucking Scott Wapner on CNBC, not Ernst & Young signing off on an audit, not the New York Stock Exchange, not the NASDAQ, not Jerome Powell, not Donald Trump. Nobody's going to be looking out for you guys but you guys, right? So my point is, and one of the things that I try to hammer home and really, I guess, I don't really even know what it is that I advocate for, but I guess this is really it, is just try to empower yourselves. Because anybody that tells you that they know exactly where this whole thing is going, they know exactly where the global economy is going, they know exactly where this company's stock's going, anybody that tells you that, that's really the most arrogant thing that you can do in finance. The most modest thing you can do is sit back and realize, maybe I don't know everything. It's okay to say I don't know. and acknowledge the fact that the road that we're on now is unprecedented. So try to keep a good head about you, because CNBC is not going to do it for you. Don't listen to them. Don't listen to me. Listen to yourself. That's it. Thank you guys very much.